Bitcoin price. The market is experiencing significant volatility, compounded by selling pressure following a correction from peaks near $126,000. Some institutions have begun reducing their positions, or at least showing signs of being affected, which is putting pressure on market liquidity. Strengths: why Bitcoin might rebound. Supply limit. Bitcoin has a fixed cap of 21 million coins, and with the slowdown in recent issuances, this reinforces supply pressure relative to demand. Institutional portfolios. Major institutions still view Bitcoin as an alternative asset and a hedge against inflation and macroeconomic volatility. Potential for recovery. In a positive scenario, if the economic climate improves, calmer monetary policies, global liquidity, and market stability, Bitcoin could rebound strongly. Weaknesses, risks, high volatility. Its price can rise or fall rapidly due to interactions between traders, leverage, and shifting market sentiment. Dependence on external factors. Central bank decisions, interest rates, global crises, and regulatory decisions all significantly impact demand for risky assets like Bitcoin. Temporarily low liquidity. If large institutions or whales exit the market, it could experience a sharp downturn as a major correction. If you believe in the long-term future, maintain a hodl loan position and diversify your portfolio. Don't put all your capital into Bitcoin alone. Divide your portfolio. Be prepared for ups and downs. The market isn't for the faint of heart. Stay updated on economic news and monetary policies. They can control significant price movements. Scenario 1. A deep bull run. Expected probability, 40%. Potential trajectory. After a prolonged period of monetary tightening, the world begins to enter an economic expansion cycle. Investment funds and financial institutions start increasing their holdings of BTC as digital gold. Major tech companies, Tesla, Apple, sovereign wealth funds are entering the Bitcoin market. Bitcoin breaks 110,000, then 130,000, then reaches the following range: 175,000, $220,000 in 2026, 250,000, $320,000 in 2027. Entry zones: 89,000, 83,000. Ideal accumulation zone: 72,000, 78,000. If a correction occurs, this is a once-in-a-lifetime opportunity. Exit zones: take profit. 125K, small amount. 175K. 200K, gradual profit taking. 250K plus, smart exit before the bugle. Advice for this scenario: if this scenario unfolds, the entire market enters a bull frenzy phase. Don't chase the peaks. Focus on gradual growth. Scenario 2. Strong stability with a slow upward wave. Realistic scenario. Probability of occurrence, 45%. Potential path: The global economy fluctuates between inflation and deflation. Businesses remain, but without significant expansion. Bitcoin moves in upward and downward waves, but forms higher lows. Outcome of this scenario: 110K to 135K in 2026, 140K to 180K in 2027. Entry levels: 85K to 90K. Gradual buying: 78K to 82K. Excellent area for consolidation exit levels. 115K to 130K. 150K to 170K. Recommendation: the best scenario for those building a long-term portfolio with minimal risk. Scenario 3. Temporary crash and recovery. Bear trap 2026. Probability: 15%. Potential path: harsh regulatory decisions in Europe or America. Bankruptcy of a major platform or company holding Bitcoin. The market enters a temporary panic. Outcome: a sharp drop to 55K to 68K. Then a recovery at the end of 2026 and the beginning of 2027 to 100K to 120K by 2027. Golden entry zones: 68K to 72K, 55K to 60K. If it reaches this, it will be historic. The key here is patience. A deep correction is an opportunity, not the end. Bitcoin now stands at the gateway to the future. 3 paths lie before it, each holding a different destiny. One leads to heights never before reached by humankind. Another weaves a gentle ascent, concealing an approaching storm. And the third plunges to the depths before rising again like a phoenix. As for us, we watch and prepare, because the world in 2027 will be unlike anything before it.